What's going on, everyone? As many of you know, we just had the FOMC yesterday, and we did get our cut as anticipated. But why the sell-off? We got our rate cut. This should help the high-risk assets. I think we could chalk that up to less rate cuts in 2025. And people are kind of freaking out about this here. We're not allowed to own Bitcoin, said by Jerome Powell. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed. And Powell's answer was, of course, a response to if we would utilize some kind of strategic reserve through the Federal Reserve. I personally think this would be something more of the Treasury's job. These are separate entities, but they do work together. Now, why the sell-off? I don't think it's about Jerome Powell's comments about Bitcoin. It's really about expecting less cuts in 2025. And it wasn't Bitcoin and crypto assets, the Bitcoin miners that sold off. It was everything that sold off, except Nvidia apparently. And basically now we're only expecting 2 rate cuts in 2025. And they even mentioned how their decision of the cut that they made yesterday was really a close call, although the expectation for it was around 99% according to the Fed Watch tool. I think we're in a good place, says Powell, but I think from here it's a new phase and we're going to be cautious about further cuts. And remember I talked about PCE yesterday, our next inflation data point? Well, officials expect core PCE to be stuck at 2.5% throughout 2025, which is admittedly an improvement over this year's 2.8%, but this is of course significantly higher than the Fed's 2% target. And uncertainty and upside risks to core PCE inflation both up sharply since September. This is said by Kareem Basta, the chief economist with 3 Capital Management. But yeah, see Powell's decision for this rate cut, he said it was a closer call than implied by the financial markets that considered it a near certainty, as we saw. Some of these officials also wanted to leave rates current, and Powell did try to reassure us by saying that the baseline outlook was for the economy to still continue to perform well, with ongoing growth, low unemployment, and inflation that officials expect to drift slowly lower. These were the same people that said inflation was transitory, so take everything they say with a grain of salt. They're going to say what they need to say. They're not going to say the truth necessarily. If you look at the federal funds rate, look where we're going. Do you see this ticking back up? No, we are in a cutting process. These rates are going down. They are sure as hell not going back towards the 2020-21 levels of around 0%, but can we head back towards a 2%, 2.5% interest rate? Absolutely. This will take time, of course. This isn't just going to happen in a couple months. But yeah, they're just projecting 2 rate cut decisions in 2025. If inflation continues to come down, the projection for more cuts will obviously increase. But the market definitely negatively reacted to this potential of less rate cuts in 2025. But see, slower progress on inflation, which is not seen returning to 2% until 2027, this translates into a slower pace of rate cuts and a higher ending point for rates at 3.1%. which is to be hit in 2027 versus the prior rate of 2.9 seen as of September. And you can see the Fed's dot plot. Basically in 2025, they expect us to be anywhere from where we are right now with rates to all the way down to close to 3%, with the majority expecting right around slightly under 4% interest rate, or a Fed funds rate, I should say. But we are in the cutting process. Look at the process. These rates are coming down, albeit at a slower pace than originally anticipated because of inflation. And of course, that data point we are watching, PCE, this is coming out on December 20. The forecast is a 2.5%. This is the highest we have seen since like early fall, I would say. If we can see this come in under the forecast, that would be fantastic. But CPI has pretty much stayed in the low 2s. Seeing it get back into the mid 2s would be a bit concerning. And of course, after this, we have PPI and CPI in early January. But these are going to be closely watched by the market. If inflation keeps ticking up, the likelihood of rate cuts gets further diminished. If inflation comes down, the likelihood of rate cuts increases. And also where jobs are concerned, if the labor market is strong, we're likely to see less cuts. If the labor market is more weakened, we're going to see more cuts. So it's basically a balancing act. In the end, we are going to see more M2 global supply. And this article says Bitcoin could potentially capture 10% of this $20 trillion in global money supply growth. And here's the global money supply. You can see how Bitcoin just closely correlates to it. When it pulls back, Bitcoin pulls back as well. You can see in 2021, global supply basically peaked, and Bitcoin peaked as well right around a similar time frame. Again, here in 2017, Bitcoin cycle top. Bitcoin follows its 4-year cycle and it follows M2. Maybe it follows one more than the other, but these are definitely 2 factors to watch for Bitcoin. Follow Bitcoin cycle. We are in the perfect time for it. We are in the bull phase still for likely around another year or so, give or take. And of course, follow M2 global supply. We are still in expansion. Money is being printed. This is good for Bitcoin. This is good for assets in general. Global money supply is projected to peak around January of 2026, with a monetary base north of 127 trillion. There's an increase of more than 18% from where we're at, 107 trillion, and assuming that only 10% of this additional liquidity, or about 2 trillion, is captured by Bitcoin, it's pretty clear we're going to see Bitcoin peak out at some time in 2025, or Bitcoin rally in 2025 go much higher than we are here. There are some mixed views on this, at least on the short term, because we have been seeing M2 come down a bit, and this could cause a correction with Bitcoin. The M2 global money supply could drag it down 20 to 25% according to Joe Consorti, all the way down to about 70,000. But follow the bigger picture. Global M2 supply is going to continue to expand, and despite a potential pullback for Bitcoin, which technical wise we're due, I guess global money supply pulling back we could be due, but follow the cycle and you do perfectly fine. This is not the end of the Fed cutting process, and this is not the end of global money expansion. Bitcoin has not topped out. But thanks as always for watching, guys. How are you feeling about the Fed meeting? What did you get out of it? How are you feeling about the Bitcoin miners lately? We are wrapping up Q4. It is setting up for a great quarter for the Bitcoin miners. Earnings season comes in early 2025, and we're going to be getting our Q4 results within a couple months. I do think we're going to see some surprise positive earnings, just like we saw in early 2024. Bitcoin started rallying after forward guidances was given, just like in Q4 here. And we did see some surprise positive earnings, and this caused the next rally for the Bitcoin miners. To expect the Bitcoin miners to continue to cool down more or not perform well, when the very asset that they mine, the very thing that is tied around their company so closely is rallying in price, is helping their fundamentals so much, is bringing them back to profitability, you're insane if you don't think the Bitcoin miners are going much higher in 2025. That's all I'll say. Thanks as always for watching, guys, and I'll see you on the next one.